Good morning, 9 minutes before 5, time to take a look at the markets. And we're joined by the Senior VP of TJM in Chicago, Scott Shellady. Good morning, Scott.
Good morning.
Well, yesterday we had, a tough day in the soybean market, but it looks, how are the markets recovering today?
Well, we've got, it looks as though early on here, corn up a couple cents and change. It got wheat up about 4.5, and beans are coming back 6.5, which is not a lot considering yesterday's action. However, in a macro sense, I'm still pretty amazed at how well those three products in Chicago have held up to the macro selling that we've seen happen in a lot of commodities around the world.
Yeah, the knee-jerk reaction, of course, was to immediately go to the downside with a lot of bearish numbers, or numbers that, I guess, stayed basically the same, or markets expected, or the traders expected.
Right.
But what's going to influence the markets here within the rest of the week?
Well, we're gonna watch the dollar. I think that's going to start to affect a lot of us, and it has on a lot of the other commodities. And like I said, we've seen these commodity indexes at 5-year lows, but corn, wheat, and beans have been holding up pretty well. And yes, they've had their own little micro stories, but I think that as far as feeding the bull, we're going to start to need to see bullish news on a daily basis or a weekly basis here to kind of continue at these prices, because if we get decent spring weather, if we see that dollar strengthen, and I think it's going to strengthen because we've got all this chatter about rate hike, which I don't think we should have, but the rate hike chatter and the good, if we have any decent spring weather, I think that's just going to put some black clouds on the horizon. But I think being short those three commodities right now is a crowded trade, and that's where the weak money is going, and that's why we see it kind of hang in there when you expect it really to roll over.
Where's the managed money at, and where are they long in the market?
Well, I don't think I think managed money, at least what I've been seeing come through, has been they've been fairly active in the options contracts, and what they've been doing in the options contracts is buying a lot of put spreads, especially in the bean market. They've been buying a lot of put spreads, so they haven't really expressed their opinion in the futures market as much as I think they have in the options. They've been either buying just outright puts or buying put spreads, and that gives me an idea that maybe they might still be long those underlying contracts and they're giving themselves some protection, or they just think that there's an outright move to the downside. However, that just hasn't come to fruition as of yet. Yesterday, yes, we did have a little bit of a big a down move, but since November, when we got our first bearish report, we've seen the beans put on $1.50. So that's where we stand right now.
All right. Well, a lot of optimism should be, but cautious optimism, huh, Scott?
I think cautious optimism is exactly right. And like, folks out there should know that the crowded trade, and what I mean by that is that a lot of the players that are late to the party, which usually are the weak players, have been trying to get short these commodities, and we haven't seen a lot of farmers selling.
Okay, Scott, you got to run.
The weather's kept us out. Okay.
Thanks a lot. Have a great day.
See you.
All right.